Peak Wealth Management proudly presents Finding True Wealth with certified financial planner Nick Hopwood and accredited investment fiduciary Jim Pilat. Nick and Jim believe by making simple, good financial decisions, you can retire with confidence. And now, let's turn it over to your hosts, Nick and Jim.
Welcome everyone to the Retire with Confidence podcast. I'm Nick Hopwood.
I'm Jim Pilat.
And we're going to give you our thoughts on the market over the past few weeks, kind of a special market update.
Yeah, it's been a bumpy stretch for us here, hasn't it?
Remember that movie Office Space with Peter Gibbons?
Oh, yeah.
One of my favorites. It's like a cult classic. One of my favorites.
Yeah, for sure.
Every night if I can't sleep, I put that on.
Oh, that's
and it puts me right to sleep. Like a baby.
Yeah.
Because I just know every line, and so you don't have to concentrate.
You're mindless, right?
Yeah,
you can just
exactly.
watch, yeah.
Exactly. So, do you watch TV at night?
Sometimes.
Okay.
Yeah.
You watch Office Space
some movie
as well?
I've seen 100 times or something.
Yeah.
It's perfect.
That's
I'm
the
right
idea.
with you. I get it.
That's the idea.
Yeah.
So in that movie, Peter Gibbons, the main character, he hates work. Okay, and so he goes to a occupational hypnotherapist, which is made up, right?
Right.
And he's sitting there in the chair, and the shrink is asking him, what's the deal? And he says, well, every day I go to work is the worst day of my life. And then the shrink says, what about today? Is today the worst day of your life? And he's like, yes. And then the shrink's like, oh, that's messed up. But that's kind of how I feel every day the Dow goes down 1,000.
I had that thought this week a lot, yeah.
Yeah. So like every day it goes down 1,000, it's like, this is the worst day of my life. And, you just want to get it over with.
Yeah.
Right? And this has been a race to the bottom. Faster, first of all, the fastest drop of 20%, now the max is 27-ish percent.
Right.
The fastest drop ever.
Yeah.
Ever.
That was one of the things that really stood out, wasn't it? Is you'd wait. I mean, every day it was moving in such big chunks, percentage wise and point wise. I mean, it was really quick.
The quickest. Some other things that are notable is that this week, and thank God it's Friday, right?
Yeah.
And it's actually up.
Yeah.
But this week is the worst week since 2008. Last week, at that time, was the worst week since 2008.
Oh, consecutive.
Right, and so now, right, it's really piling on. And then yesterday was a 10% drop on the Dow, and that hasn't happened since 1987.
Okay. October,
so
yeah.
I've been doing this for 20 years. I've been through the dot-com crash and been through the 2008 crash, and they're each unique. But we never had a 10% down day like in 1987. In fact, in 87 it was worse. But we've never had a down day like yesterday. And it's relentless. Okay.
Right. Feels like it's never going to end.
Right.
Yeah.
And when you feel that way is kind of when usually it turns.
Yeah.
And this is not investment advice for anyone. There's no specific recommendations in this episode. We're just talking in general. Okay.
Yeah.
So, what are a few things that we think need to happen, right, to get through this from a market perspective and from an economic perspective?
Yeah, great questions. I mean, I think that we got to get past the fear. First of all, I think the fear is not just in the market, but it's in society. Right? Everybody does not know what to expect. The one thing that markets do not like is uncertainty. And with the amount of uncertainty out there, it's causing a tremendous amount of fear, which is in my mind is really the leading cause of the pullback here.
Yeah, when you have originally it was like NBA canceled, flights from China canceled. Now it's flights from Europe.
Yeah.
Disney World is closed. My kid's school is closed.
March Madness.
Yeah, I mean the Michigan basketball team was warming up on the court on Wednesday in front of no fans, and they told them at like 11:59, "Hey, go back to the locker room." And I feel really bad for these seniors, right?
Yeah,
they're done.
Right.
Like you usually go into your last game thinking, if we lose, this is our last game.
Right.
It's over.
Yeah, it is heartbreaking, right? All the things that are the fallout of this, right? What the seniors in their last trips and the spring breaks, and I mean the list goes on and on of things that are affected by this. No doubt.
But I was thinking that in order for us to get through this, right, we need to see some evidence of containment. So every day now, there's more cases, whereas in China, there's it's been a dramatic reduction. Okay, and if we can follow that path, right, that's a really nice piece of confidence. Okay, so that people are going to say, we don't have the testing and all of this, so we don't really know, and that's a fair point. But if we have less cases day after day, like it could still be sloping up, but a deceleration of the slope or a negative slope in itself, right? It's evidence that it's not spreading as fast, right?
Yep.
And then secondly, we don't really know what the specific economic impact will be as a result of everything shut down. It's going to be bad,
right?
But we don't know how bad.
Right. Is it a Q2 thing, or does it linger beyond that?
Right. Exactly. And then we're also getting some policy response, but it's not maybe in the magnitude. There's still uncertainty there. Like the Fed has stepped in with cutting rates and buying bonds like a QE.
Yeah.
But also the fiscal government, right? They're probably going to come up with a package of something over the weekend, and we'll see what that is and if it brings confidence. It's really confidence,
right?
That they're helping.
Yeah.
Right? Because when the president spoke on Wednesday night, he said that we're shutting down the flights, which was a really scary thing.
Yeah.
And he didn't say anything else ultimately, and so the market did not like that.
It didn't know how to interpret it, right?
And then you go down 10% the next day.
Yep.
Okay.
Yep. It heard the fear part of it more than it heard the we're going to make it okay.
Right.
You know?
Right. So I'm an optimist. Okay. I think Jim is an optimist as well. So I believe because of all the shutdowns that we're seeing and everyone's hunkering in to their bomb shelters, I believe that we will have a pretty good containment. I'm looking forward to that slope decelerating. I'm looking forward to, more like China numbers today,
right? Rather
than the Italy numbers of today. Okay,
right.
So I think that will work.
Yeah, absolutely.
And when was the last time you touched anyone?
I know, right? I elbow bumped a guy this morning. That's about it.
And that's risky, But as a result of all the shutdowns, we're going to have a recession. Okay. Yeah. We're going to have a recession.
No doubt, it's going to affect the economy, right?
Now, if it's like a 4-week thing, maybe there's no recession. But I just don't think it will thaw out that quick. I think that we're going to have a recession that will start in March, and maybe it goes to maybe really Q1. Well, the beginning part of the year was fantastic for the economy. So probably the first quarter will still have growth because they measure these things quarterly. So probably the first quarter still shows growth, and then Q2 goes negative.
Right.
Even if June is good, Q2 will probably be negative.
Yeah, we'll get earnings warnings and everything for Q2 for sure.
Yeah.
But how quickly does it come back online, right?
Yeah, I mean, if in my optimistic scenario, probably pretty quick. The summer is good for the backdrop of the flu. Right.
And I think you made an important point, though, is the fundamentals of the economy were really strong earlier in the year. This kind of came out of nowhere, right? Nobody saw that we were going to get to this point this quick. Yeah,
I mean, the jobs number in February was remarkable.
It was still,
it was remarkable.
Yeah.
And that was like 2 weeks ago.
Right.
So we shut everything down. We have a recession. But because we shut everything down, there's no outbreak. And we're back to work. Right? So I kind of feel like that is my optimistic scenario. Now, what does that mean for the markets? Well, it's already been down almost 30%. Okay?
Right.
So in a recession, you have a 35% drawdown oftentimes. Right? So that could mean that if my optimistic scenario plays out, we do have the recession. Maybe there's a 35% drawdown. Maybe. Maybe yesterday was the last capitulation.
Was the flush.
I mean, I'm not ready to say that was the day, but I feel like days like yesterday, they remind you of a bottom. Okay, so we've been telling people, for the young people, for the accumulators, for the people that have cash. Like this morning, got a call from 2 clients actually. They had their bonus drop today, and so they put it in.
Yeah.
Right?
Yeah. It's an opportunity.
Yeah. Also, people who were hoarding cash and they brought it in. We put together a monthly plan to buy every month. Well, we're accelerating that plan now.
Yeah.
Because you don't want to just arbitrarily pick the first of the month when you have a 27% drop to take advantage of.
Right.
Right.
Yeah, it's important to be nimble and be ready to take advantage of that.
Right. What about the retirees? If you're taking required minimum distributions, right, it makes a lot of sense to have a year or more of cash. So if you are taking a monthly withdrawal right now, let's say March 13th or March 12th, even better.
Yeah.
Is the day of your monthly withdrawal.
Right. You don't want to be a forced seller.
Yeah.
On a day like that.
Yeah, that's right. That's right. You're selling at like a 3-year low on a 10% drop, the biggest one since '87. So we're big advocates of having that short-term cash bucket where the money is safe. We know that for the next year we have cash. We don't have to sell stocks or anything because the cash is there.
Yeah, and that's an important thing to consider when the market feels like it's dropping every day, right? Is remembering you have this money set aside. You don't need to move to cash. You don't need to jump to protect it. You don't have to make any knee-jerk reactions that are going to cause you to be in a worse off spot because you sold at the worst time. How would you like to miss the rally today because you just couldn't take it anymore, right?
Yeah.
But would you get a peace of mind to know that, hey, this is still money that's a couple years out before I need it? That's always an important thing to remember. A
friend was asking me yesterday, who in their right mind is selling right now? And we're just joking, but who's selling yesterday? I don't think you were. Right?
No, it's funny you bring that up because I was actually talking to one of our strategists that we use, and he said that they felt like the market was oversold, but one of the things that they do is they closely monitor the buying and the selling action. Where's it coming from? And he said that everything that they're looking at shows that the retail investor is doing the selling and the institutions are the ones doing the buying.
What does that mean, retail versus institution?
So, the individuals, right? The people who just can't take the pain anymore. People who are tired of it seeing go down and they don't want to lose anymore. Do-it-yourselfer. Joe Smith out on the street kind of guy that wants to do it on his own. He's getting out, and that's what's a lot of the selling pressure is coming from that side. And the institutions, right? Think of like the mutual fund managers and the big, the smart money, right? The smart money is the one stepping in and buying.
Okay.
So he said that was something that tends to be a really good long-term indicator, is what he said. So I thought that was interesting.
Yeah, kind of a contrarian indicator.
Yeah, for sure.
So,
what Warren Buffett, a good Warren Buffett quote, right? Be greedy when others are fearful. Yeah. And that really kind of applies to what we've seen.
Wonder if Warren will spend some of those $130 billion buying out some of these companies that are half off now. Yeah. Like Delta Airlines or something. Just complete speculation.
Right.
All these airlines, a lot of other companies are down half.
Yeah.
Right?
They've really got hit.
I don't know what Delta's market cap is, but Buffett could come right in and just write a check for Delta.
Right. This is what he's been waiting for, right?
Yeah.
A pullback of some sort to put some money to work at a better price, and that's exactly what he got.
Yeah, that's right. So we'll see if he pulls the trigger. Let's see what else. So one pattern that we often see on the charts or with a bottoming process is a big down plunge, okay, and then a rally back, right? It comes back up, and it starts to feel better, but then it rolls back down, and it comes back down to that low that you had maybe a few weeks before,
right?
And we call that a double bottom, and oftentimes that first low point needs to be retested. And if it holds, then that's a really great signal.
Right.
If it doesn't hold, well, then there could be another leg down. Maybe that's like the 35% kind of deal.
Right.
But be aware of that pattern. I think that it happens quite often with a bottoming process. And just one more comment, comparing this to the last two recessions, I think this is worth noting that in March of 2000, from that all-time high, the S&P 500 had a PE ratio of 30, highest ever. The NASDAQ had a PE ratio of 70 plus, okay?
Right.
And the market lost 50% between 2000 and 2003. We had the dot-com bubble, we had 9/11, and plus a recession all mixed in there.
Yeah.
But it was severely deep because of the starting point.
Right.
It was just way too high. 2008, it was not a stock market bubble, but the real estate bubble. And when real estate unwound with all the credit, the banking crisis, right? That was a real asset, basically a depression,
Right.
like 1929.
Right.
When it's real assets, that's what we get. Okay. And again, more than 50% drop. This one, right? I hate to say this time is different. There's always a different reason, right?
Yeah.
But this recession, okay, will not be because of a bubble, because the S&P was like at a 19 PE ratio,
Right.
Which is just a little bit above average.
Yeah.
It's not. I wouldn't even call it very stretched.
Yeah.
Right? Just
No,
kind of
no.
in that zone,
Right.
in the normal zone.
Fully valued, but maybe not. Yeah.
Yeah, not undervalued.
Right.
Today, though, right, people would make the argument that it's undervalued.
Right.
Okay. So we start with a PE that's normal, okay, and we're looking at a bubble, a real property bubble, or a banking crisis. I don't see any of that.
Right.
Doesn't make sense that where there'd be a parallel. Okay. So this one, again, this is my optimistic scenario. Okay, where there's containment, where there's the uncertainty is if we can't contain it.
Right.
Like with the subprime
How
in
long
2007.
does it go on, right? Yeah.
Everyone said, well, why is everyone making a big deal out of subprime, right? We're making mountains out of a molehill. But people just didn't understand the subprime.
Right.
There were only a select few people who understood the problem. Okay. In this case, okay, maybe there's something that we don't understand. Right? And that's the only part that keeps me really fearful. Right?
The unknown, right?
Right, yeah. Like maybe this is truly something that we can't contain. But I have a hard time believing it because I look at China, So that would be the only thing to me, right, that really takes you down to that kind of a level from 01 or 08.
Right. Yeah. So a quick question, let's see how you answer this, but we talked about this recession possibly leading in, going a couple months, maybe Q1, Q2, whatever. Do you feel like that necessarily correlates, though, to the market being down all that time?
No, the market leads us down, okay? So the market's been leading us down here February and March, right? And that signals the weakness.
Right.
The forward-looking weakness.
It's pricing in the weakness.
Yeah, it's pricing in a recession. Now, when it starts to turn up, whenever that is, okay, it'll be before the recession is over. So you'll look around and maybe we're still having these problems as a result of kind of shutting everything down. Right. And it will still feel like different and strange, but the market will start leading up.
Right.
And it will be in advance of the end of the recession or the weakness if it's not a recession. Good question.
Yeah. I just think that's important for people to understand that just because this could go on for a couple months, that doesn't mean that we're going to lose 1,000 points a day for the next couple months, right? That doesn't mean that at all.
No. This is like the initial shock.
Yeah.
I expect that we'll have volatility, but it should not be like these 1,000 point a day throughout this whole thing, okay? Because there'll be more visibility, and when we have more visibility, the tension, we could still be down, right? But the tensions will ease a little bit, okay? But there'll be these pockets of gyrations for sure.
Yeah.
So hang in there, right? Let's be optimists. Do your part, like everyone seems to be the rallying cry. But look at where the market is and understand that typically you're rewarded if you look out, 1 year, 3 years, 5 years.
Yeah. Some of the hardest buying I've ever done was 2008 when it just seemed like it was never going to turn around, right?
Yeah.
And it just would keep throwing money at it, and in hindsight, that was some of the best money I ever invested.
So for our clients, if you'd like to take the risk quiz, if you'd like to set an appointment, if you just want to have a phone call us, email us. Okay, we're here for you. For people that are looking for a second opinion, do the same thing. Go to the website peakwm.com and start on the prospects page.
Sounds good.
All right. See you next time.
Bye.
You've been listening to certified financial planner Nick Hopwood and accredited investment fiduciary Jim Pilat on the Finding True Wealth podcast, sponsored by Peak Wealth Management. You can learn more about Peak Wealth Management by visiting peakwm.com or follow on Twitter at nhopwood1.